Hey, welcome to the exchange. So in this video, I'll check out the Coinbase stock, kind of see where that fair market value is in my opinion. But I mean, if you've been following cryptocurrencies in the past few months, I mean, they've absolutely been crushed by basically a crypto nuclear winter. So like all coins and NFTs, I mean, absolutely annihilated. Even the mainstream coins like Bitcoin and Ethereum have drawn down pretty far overall. Let's look at where the fair value might be for the stock and how it might rebound in the future going forward. So this is the model I built of Coinbase itself, but let's start in the revenue section first. So you see 2021 revenue, 7.8 billion. I mean, they've had a massive growth rate since 2020 and 2019. You can see that right there. Now, 2022, which priced in today, actually is a 45% revenue decline. That's already expected. The market basically expecting that overall. So if they come in those numbers and match those numbers, it'll be no really change in the stock price or valuation overall. Now, you're seeing here, I mean, really, this is the crypto winter. It's really priced in. I'm looking at here from 2022 to roughly even 2025. So I mean, maybe 2 or 3 years of slower kind of downtrodden crypto prices overall as the recovery actually takes effect in the long term. No, I'm saying they're going to match roughly 2021's revenue. I'm saying roughly in 2025, 2026, somewhere in that time frame. I mean, look at here. I'm saying by 2027, it's roughly a $9 billion revenue company. So this company is still alive. They are not going away on the revenue side. It's still very much, crypto is still very much a real thing overall. Now, looking at the actual revenue streams here, you see net revenue is basically transaction fees on the app itself, which basically when you buy or sell crypto, which they're still very much alive in that aspect there. Now, you notice here other revenue. It's a different kind of bucket. What this is actually is large-scale crypto asset sales for corporations or other entities out there too. Also custodial rights fees, basically managing crypto for corporations itself on their platform itself. They actually take a fee from that, which that's absolutely crashed in the last 3, 4, 5 months overall. And you see, hey, from 2021, $484 million to now, I'm saying being very generous, roughly $20 million overall. So here's actually some good news though too. This is actually from their first quarter 2022 shareholders letter. It came out May 10th, 2022. Let's scroll on here to actually one of those boxes here. So this is key business metrics. So this very first box here, hey, monthly transacting users. This is like almost like monthly active users in a way. 9.2 million in Q1 2022. It is down versus Q4 2021, but it beat every other quarter in 2021 besides Q4, which is very, very good overall too. So it's also, hey, the platform itself is very much alive. It is very active, which is a great sign for long-term viability. Looking at your trading volume, I mean, it is massively down versus Q4. It's at $309 billion, which is not surprising though too, because as crypto prices drop down across all the altcoins and the mainstream coins, this makes sense. If it ever bottoms out and you actually see crypto recover in the long term, this will increase with that too. It should be very, very correlated overall. The most important thing for me, actually, the most positive sign of this entire actual graph here is actually assets on platform. This is in billions. 256 billion. It's a slight downtick versus Q4 though too, but it's not a massive drawdown. It's not like a massive crash overall. What this shows me is trading really has calmed down quite a bit on the platform itself. Now people are actually holding their crypto on the Coinbase app itself and basically riding this kind of actual crypto winter out for the long term actually. And if it ever recovers for the long term, they're going to go back to trading more actively, trading more, basically more engaged with the platform itself though too. So hey, long-term viability here, it's almost like a reset we're having right now. And this long-term viability, it actually makes sense for me for a long-term investor. Let's move down now to operating expenses here. I really highlighted the big ones here. What we should focus on is percent of revenue that's changing. So this is transaction expense. You're seeing, hey, 2021 percent of revenue was 16% of revenue. Looking at now, percent of revenue in 2022, this expense line goes to 22%. These are just massive increases overall. So even though the top line itself, it went from 1.2 billion to roughly $900 million or so, the actual portion of the pie itself as a percent of revenue actually grew, which is a pretty bad sign. I'm looking at tech and development OpEx line here. Same story there, roughly 16% in 2021 to 44%, I'm saying, in 2022. Roughly from $1.3 billion to $1.8 billion. Sales and marketing, it's roughly flat on basically a cash basis, but looking at actual percent of revenue here, it basically doubled year over year in 2022. Now looking at G&A, this is the general administrative cost. Now this would have been much higher overall, but they actually had massive layoffs. This is as of June 14, 2022. Laid off 18% of their workforce, basically as to prepare for the recession and crypto winter overall. Now, looking at the numbers here, it went from 12% roughly, I'm saying now in 2022, roughly 32%. So again, pre-layoffs or prior to layoffs, I mean, this might be like 35 or even maybe 40%. This could be a massive blowout for them, which they could not afford, and they knew it. And that's why they had those layoffs. But it wouldn't shock me, honestly, if even second half of 2022, if there's further rounds of layoffs overall too, because financially, these numbers here are not very pretty for 2022. So looking at 2023 and beyond, so these OpEx expenses as a percent of revenue should come down as the revenue base expands, in those, basically upcoming years itself. But 2022 net income wise, I'm saying this year they lose roughly 1.3 billion dollars. Now notice here we're looking at 2023. I'm saying, hey, if the revenue does have that U-shaped recovery, and there actually is a crypto bottom itself that's met in 2022. 2023 actually should be a pretty decent year, assuming OpEx expenses don't come too out of control. They actually keep those actually capped to a certain degree. I'm saying here roughly $41 million profit. Really, the expansion actually happens in 2024. You're seeing roughly right there a $1.7 billion profit. And I'm saying, hey, by 2027, roughly a $3.3 billion profit. So this company is very viable in the long term if they can survive this crypto dip and crypto winter overall the next year, maybe even 2 years potentially. So let's look at valuation now. So what I did here is I took FY27, so fiscal year 2027 EBIT, which EBIT is earnings before interest and taxes. I'm saying roughly here $3.9 billion. I gave it an EV versus EBIT multiple here, which is EV's enterprise value. It's basically the company value as a whole itself divided by the earnings before interest and taxes multiple. So I took here the 3x multiple on the high side. I think 2x is really the low side here. Really, it's a bracketed range of the valuations themselves. So I'm saying here the high side is $53.45. The low side is $35.64. So right now we're actually crashing through those fundamental value itself. Now, so it's not saying buy right now. It's saying, hey, that's the actual fundamental long-term value where I see this company based on this model right here. Now, we could drop well below that too, especially the worst it gets with both recession fears and also crypto winter fears and everything else too. Also, another thing to notice here too is also the book value. So the book value is actually $29.35. All book value is if you go to a company's balance sheet, this is Coinbase's balance sheet from March 31st, 2022. You take their balance sheet, go to the very, very bottom. Right here, you see total stockholders' equity of $6.496 billion. Take that number, divided by total shares outstanding itself, you actually get an equity value, or actually a book value itself. It's basically an intrinsic value of the company itself today. Now, what the book value should do at $29.35 should act as a floor of support for the stock itself. So the closer it gets to that price, the downward trend should slow down quite a bit. Now, if it crashes below the book value, it's almost like a red flag. At that point, I might just tap out and call it a day. Now, obviously, for a long-term investor, long-term believer, that doesn't really matter as much. Just be aware of that, though, too. That's where the book value line is at for this stock. So that's my view on Coinbase's top end and bottom end fair value range, which we're trading there right now, obviously, too. So we'll see kind of where it plays out in the near future. But yeah, be sure to sub, like, comment down below. And until next time, best exchange.